Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Friday, April 25th. Friday, the stock market attempted to make a late-day push higher, but encountered resistance at a major technical hurdle. Still, stocks ended the session near their best levels and concluded the week with a marginal gain. Oil rebounded Friday to weigh on investor sentiment, closing $2.43 higher at $118.49 per barrel on the New York Mercantile Exchange. Oil traders sent the commodity higher amid concern that strikes at a BP refinery in Scotland and an unrelated facility in Nigeria could jeopardize production. Crude hit a new all-time intraday high of $119.90 per barrel this last Tuesday. The Nasdaq was an underperformer Friday. Microsoft weighed on the tech-rich index and was the Dow's worst performer. Its shares fell more than 6% in response to an underwhelming fourth quarter forecast issued after yesterday's close. In turn, technology was the worst performing major economic sector, finishing the day down 1.2%. The financial sector made a healthy 1.7% advance today, marking the second straight session with a gain. American Express attracted its share of buyers after posting earnings results that exceeded the consensus estimate for the most recent quarter. Still, Citigroup, the largest bank in the U.S., provided the sector with leadership. According to an article published by Financial Times, Merrill Lynch is in discussions with private equity firm TPG regarding possible investments in Merrill, should Merrill need funds for its investment bank. The materials sector was the best performing sector today, finishing 2.8% higher. Monsanto and Freeport-McMoRan provided the sector with the most support. Shares of Ford Motor Company were knocked lower after being downgraded at JP Morgan, Merrill Lynch, and Bear Stearns. JP Morgan downgraded Ford shares to neutral from overweight, Merrill Lynch downgraded the shares to sell from neutral, and Bear Stearns downgraded Ford to underperform from pure perform. Yesterday, shares of Ford made their highest single-session climb in years after announcing a quarterly profit that reversed a loss in the prior year. Today's decline erased that gain. Treasuries were out of favor again this session. The benchmark 10-year Treasury note slipped another 10 ticks and is now yielding 3.87%, the most since late February. I'm Jeffrey Ham for Briefing.com, and thanks for listening.